Hey, it's Ryan from the Mandiv Fund. Now, it's been another exhausting week. Well, today we begin another exhausting week, likely, with the consumer price index figures being released at 9:30 tomorrow. These should generally affect retail stocks. Now, it's all dependent on how your thoughts are. You'll likely see this video anyways after the CPI data is released. But a lot of action has occurred. I mean, if you look at the prices on the FTSE 100, you can notice a lot of shares have fallen below certain levels, and only a few have broken above certain previous highs. In particular, I think British American Tobacco has still been rallying. Convatec bounced off 182 to 191. Tesco still near its lows of 175. Glaxo paid out its dividend, I think fell 2% on that. What's another one to see? AstraZeneca, more trials, and of course, those trials are supposedly looking on the right track. Diageo, beverages, and of course, they've done well today. We cannot tell specifically why, because the overall market is down, and that's, I think, because the weakness of the pound and also the shorting of the index is a potential reversal. Who knows, to be honest. Nasdaq has continued rising, so it's quite weird to tell what the right thing to get into is and what the wrong thing to get into is. But you can see the dominant ones that have been rising. In the small cap, Halfords, it's had a long rally, and you can see the ones that have taken a whack today. Kinetic Group, I'm not too sure why that was. I can see that Ferrex Expo's fallen on iron ore reversing. I believe it's still about $61 a ton. This is 62% iron ore Chinese exports, so that should be the price per ton there. Now, CAS Minerals also, I think these spiked downwards today to about 772. Of course, we've been in class, so we didn't have any opportunities to look at these. And of course, you generally get that with these certain stocks. They have a certain period when they fall heavily, and then of course there's the trade. The problem with the trade is you have to sell the next day after you buy, and in this case the bounce may just be caught into a downtrend and you'll end up losing significantly. So these plays are very risky. Very interesting one here, Debenhams Group. It's, I think, one of the most shorted stocks you can look at on the entire exchange. Now, Debenhams has fallen from the point where Mike Ashley of Sports Direct, I believe, was it Sports Direct? I think it is SPD, yeah. Mike Ashley of Sports Direct had bought more shares into Debenhams at about 62 pence a share. Now he's down about 50%. Some people say maybe he could buy more, but they held shares in Game at about 80ish, and it fell to 40, and they didn't buy all the way until 19 pence. So this still has that similar scope. There's no talk of shorts reducing. At this rate, they're just supposedly seeing a silver lining in a negative view for this company. Now, Debenhams is heavily shorted. You don't generally see bounces on things that are heavily shorted, but of course it does have a lot of movement. It's one of those very risky plays now. But one would have to look at results coming out. The previous results, I think, showed increased profits. So it was a bit weird. Of course, I wouldn't intend on looking into that kind of a stock for now until it looks extremely oversold, because you look at the chart, you'll still get an RSI of neutral to buy zone territory, which isn't an amazing buy zone, especially for something with that kind of a short position, especially disclosed above 0.5%. Goodness knows what the actual short position is on it. I just have to find out. Maybe that would be something to research also. And Burberry took a whack on luxury chains being closed down in non-luxurious areas, I believe. Fresnillo the Wacker silver price, and of course Fresnillo is falling with it, but I think it's falling with the market's overall movement because the FTSE is down, if I could recall, about 0.6%. I don't know, it was 7,417-ish. I think that was the close on the FTSE 100 index. Babcock has taken a large fall today, and this is a defense manufacturer. Now, this company is like BAE Systems, and it's also like Rolls-Royce in this case, not in terms of cars, but aerospace and defense. That's what it's similar to. And companies in the sector have taken a major retrace, or what we'd call a major retrace. And this is because Ultra Electronics, their CEO, had stepped down for no apparent reason. And also, they issued a profit warning. So, two negatives, and you'd think they say because of the lack of UK's requirement for arms manufacturing. Now, for my personal opinion, and the group, after numerous discussions in the previous weeks, we came to this conclusion anyways. We'd known that these shares were going to fall because what happens is you have the government pouring money into companies so they don't go bust, and there's that point that they keep losing money to the point that the government only delivers their profits, because these government contracts are made to just create some value into the company and make sure it's still going and it doesn't liquidate. Problem with BAE Systems and Babcock International Group is they have these negative scenarios to them. Now, the geopolitical situation in the world is, of course, unstable, but could be something scary if everything does say more. God forbid a war breaks out, but it could be something to capitalize on when something were to be like this, or if it's say the PE ratio. It doesn't say it here. Don't worry about that. The analyst forecasts are obviously biased. They range up to 1,300 GBX a share, meaning £13 a share. I think, yes. Now, we've thought this is a reasonable buy for those who like speculative risk, but of course, I do believe it has potential scope to go further down myself, but the others in our group share a different view. So, of course, we have to work with the team's view. So that's what we did. We took the trade into this, and hopefully it would deliver a reasonable profit in the short term. Of course, a 7% fall on a peer underperforming is a bit ridiculous, but of course that could be the true realization of what's happening to defense companies right now. And it's not really anything else too interesting. A lot of the market is just down. BT's looking for a bottom. Shire has broken below support. Whitbread broken below support. Sky, who knows what's going on with the Rupert Murdoch takeover. This is just the London Stock Exchange itself. That's 0.81%. And who knows, BP oil maybe getting to the top of its bracket, 30% up from year lows, or even more. I think like 33%. It went from about $47 to 64. I think it's 63 about now. So the markets have not done too well on the back of that. Of course, there's a few stocks that have done well today, and those include Pearson's, Halfords in this case, Greencore, Unilever, Anglo American, which is an interesting one because I think it's just due to gold being up today. Usually correlates with the FTSE, but as you can see, there are so many different scenarios going on, and you need to always keep updated in the game. Now, we've been working very hard, although we only have one session a week now due to GCSE exam stress for the majority of us. That one session gets a lot done, and trust me, work with your team and hear out other people's views and work based off the most logical solution, and it will go really far. You'll get consistent gains in the competition and real life investment. That's it. Man them out.